Not far from the Jean Val meeting, as people did their shopping, the poor state of the real economy in mainland Europe makes talk about a central bank seem rather surreal. The recession and high unemployment are raising questions over the whole timetable for European monetary union, a more fundamental problem than the bank location.
As far as EMU is concerned, we have questions which are more important than the seat question. Maybe that the seat question is very important to Luxembourg, Germany, the British, but as far as the fundamentals are concerned, we have questions which are heavily more important than that.
At Jean Val, all know the process is reaching its final stage. The site of the new bank should be announced by the end of the month, a significant prize for the successful bidder.
And coming up on the next edition of Your Portfolio, the opening of a special 5-part series showcasing some of Boston's top mutual fund companies. Tonight we'll take you to the headquarters of Pioneer, an institution known for its dedication to value investing. And joining us to offer even more insight will be Frank Boggin, the senior portfolio manager of Pioneer 2 Fund. It's going to be an interesting show. We hope you'll join us tonight, 7 p.m. Eastern on Your Portfolio.
But first, coming up next, it's time for Money Talk. Ted David will be hosting that show as usual. Today's topic, the costs of going to college. They're rising every year. The question is by how much, and what can the average person or family do to prepare for that? Neil Godfrey of the Children's Financial Network will be here to answer your questions about dealing with those costs. If you have a question, give us a call at 1-800-752-CNBC. Ted David and Money Talk after this quick break.
It just opens up a whole world of opportunities.
It is a state-of-the-art way to make money today.
Introducing Investors Business Daily. It's the new voice in journalism, edited for America's business and investment community.
It's helped me make a lot of money.
Get 10 issues of Investors Business Daily, plus the audio cassette How to Make Money in Stocks, absolutely free.
It's a no-lose proposition.
It's an invaluable asset.
Call now. The cassette and the issues, a $25 value, are yours free.
How can you refuse something that's going to educate you, hopefully make you money, and you're going to give it to somebody?
You'll get business articles, graphs, and tables you won't find in the Wall Street Journal.
The paper provides information that obviously you can't get anywhere else.
It gives you a clearer direction of where the market is heading.
I recommend it to anybody who has an interest in the stock market.
Call now. Get 10 free issues and the 10
and options for $20 plus from whole milk to skim milk, huh? 24-hour convenience with your touch-tone phone or PC. E-Trade ties you to the exchange. You control your trading. E-Trade. 1.5 cents a share and fast trade execution. Call 1-800-STOCKS-3 now and let E-Trade, America's electronic brokerage, save you time and money. That's 1-800-STOCKS-3.
Learn how sophisticated investors make huge profits on currency. Call 1-800-9-FUTURES and receive a currency report absolutely free from the Investor's Advantage. We'll also include 10 dynamic techniques used by professional traders. Don't miss this golden opportunity.
Futures traders. Tired of paying $60, $100, as much as $200 commission? Sterling Investments provides commission rates as low as $20. Call 1-800-2-PROFIT and Sterling will send you a free 6-month trial subscription to Futures Magazine, because you deserve the best.
Gathering information to make smart mutual fund investments.
Now you can have the perfect World Series souvenir, the official 1993 World Series video. Highlights of all the spectacular players and plays from the Championship Series and the World Series. To order the 1993 World Series video for $19.95 plus shipping, use your credit card and call 1-800-671-2233. That's 1-800-671-2233.
A message from Major League Baseball.
Sean McDonough with Tim McCarver and Jim Gray at Atlanta Fulton County Stadium for Game 5 of the National League Championship.
How much have numbers in general been down? Over the 1980s, the prices for college increased 126% over that period of time. That's more than twice the consumer price index. It's shocking.
Why? I mean, what's going on here to warrant that kind of an increase?
Well, the schools will give you lots of reasons why. They'll say that teachers cost more and the facilities cost more and books cost more and everything else costs more. We're not really sure how come this has been increasing. The problem is that it is. I mean, today you were talking about even a state school before. A state school today is $10,000 a year on average, and a private college is between $15,000 and $25,000 a year.
Has anybody looked at this in terms of being cost efficient? The average person on Wall Street, for example, would never invest, say, $100,000 if the return wasn't going to be there. And the question is the return necessarily there for some of these pricier schools?
That happens to be a great question, because the answer is basically it's still a good investment today to send your child to college, because on average the kids with a college education earn twice as much as the kids without.
Yes, I don't disagree to send your kids to college is a good investment. The question, though, is that, do you need to drive a Lincoln or a Cadillac, or can you get by with a Chevy is my question.
Still, the kids coming out of the top schools get the top jobs. Now, that's on average. There certainly are kids who excel and do much better and come from state schools, but on average, unfortunately, the way it looks is the kids come out of the Ivies, they do get consideration first. Doing well, by the way.
Yeah, of course, if you do well in a state school and you're running a grade point average of 3.5 or better, and you do well on MCATs, you can become the same wealthy doctor, or what used to be wealthy doctor.
Or President of the United States.
Yeah.
How's that for an example?
Yeah, you can. Now, what can you do to cut costs, though, short of going to a state school?
Well, short of going to a state school, what you can do is, first of all, think about 3 years. I did it. You can graduate in 3 years without hampering your college education. And there are a couple of ways to do that. First of all, you can take courses during high school, and then you take advanced placement tests in college, and you can get college credit for that. The other thing is a lot of colleges offer 3-year courses. What you have to do is ask them when they're going in, can you shorten, especially if you're going to graduate school. Let's say you're getting an MBA. You can usually do your undergraduate in 3 years. You can also go during the summer and take extra courses. It's not going to kill you to shorten a semester or two, and that really makes a difference.
Let's talk to Larry, and we'll come back with more cost-cutting things you can do. Larry in Pennsylvania, hi.
Thank you for taking the call. I have a question relative to the past when I went to school, and that was state financing options today. Could you briefly review those, and sources of grants printed, or some means to get to grant sources?
What's interesting about grants is that there are actually something like $6 billion worth of grants each year that go unclaimed. They're both state and federal and also private grants. There are actually people who make a living out of helping you find grants, and they also, in many instances, don't have anything to do with your financial situation. It has to do with the talents of the children and perhaps the situation of the family in terms of minority or such. So it's something to look into.
We talk about room and board. A lot of times the room is a dorm room you're sharing with somebody else who may or may not be someone you want to share a room with, and often the board is awful. Can you conceivably save money by renting an apartment and doing your own food?
You can do that. Yes, you can. You can live off campus and you can rent an apartment with a group of people. What happens, though, and the studies have shown that by the time the kids get done, they need transportation in most cases because everyone's not on the same schedule. They need to buy food. They need to equip themselves in terms of pots and pans and everything else. And by the time they get finished, they find that the savings is not necessarily that great.
What about living at home, commuting?
Living at home is great, and commuting is certainly good. And there are lots of night schools that you can attend, too, while you're going to school, and also have your employer, in a lot of cases, pick up part of the bill. But I'm talking about the traditional college education. You want to hear a shocking statistic? If you have a baby today, and the kid is going to be part of the class, graduating class of 2015, and you want to send this girl or boy to an Ivy League school, take a guess. $385,000.
That's ridiculous, though.
Scares me.
But it's ridiculous.
I'm not having any more children.
But the fact is, it's ridiculous.
It is ridiculous.
I can't believe that people would pay that. It's not worth it, and why do it?
And here we are.
David in Florida, there you are.
Good afternoon, Ted. I'm an adult who wants to go back to school, and how can I prepare for college, whether it's financial aid or saving, out of my pocket?
It's a good question. First of all, I would start with your employer. If you're employed right now, I would speak with your employer to find out if there's a work-study program you could set up in terms of both flexible hours and also having them do a tuition reimbursement plan. A lot do. If not, I would go to the college and find out if they have any sources of financial aid in terms of work-study programs that you possibly could get.
Okay. We have Mike in Illinois on the line. Hi, Mike.
Yeah, I was curious, aren't there some schools or universities or states that have programs set up whereby you can pay for your tuition in today's dollars based on your child going to school 10 years from now, and then they have other mechanisms involved where should the child not attend that particular institution, it's transferable to other institutions in the state?
They do. My problem with that is it's a little bit of a gimmick, because if you make the decision today and your kid's going to go in college in 10 years and you decide the child is not going to go to that college, or the child decides he or she is not going to go, you're not going to get your full refund, and you're not going to be able to transfer all those dollars to another school. I would tend to stay away from those. There is no such thing as a free lunch. I wouldn't do a gimmick on a college education.
Sue was out last week, and I hosted Money Talk for her. One of the segments they did was on college tuition. They're going to do it again tonight. But one of the things that somebody brought up is that there's almost a bidding war going on in certain cases, and that you can, if you're a good student and you have good grades, you can get the school to forgive an awful lot of tuition. They're willing to take it 50% off, perhaps even more, if you're somebody they want. Yeah.
I think it's a really good point. In fact, you can negotiate with almost any school if they want you, if you have a special talent. I have a niece who's a soccer star, and today they're bidding on women people too, and they're willing to do things and talk to you. And also, you usually are able to work out a payment plan too, that you can negotiate the terms that you can pay. They don't usually turn you away.
What's the smartest thing to do in terms of investment? All right, now if this child of the class of 2015 needs to have money saved. I mean, they used to say zero coupon bonds are the way to go. What do you do these days?
I would do a couple of things. It first of all depends upon the age of the child. If the child is young, meaning zero, birth, to about 8 years old, I'd go for broke, and I would do a stock portfolio, a growth stock portfolio. Don't fool around putting it together yourself. Do a mutual fund. And I would go as much growth as possible. It's the only thing that's going to outpace the rising cost of college.
But that's with a long time horizon.
That's long time. As you shorten, move into bonds, and depending upon your tax situation, you can do municipals and things like that. Then start moving out of that into money markets, because as you get closer to college, you need shorter-term bonds and more money market. By the time the child's 18 years old, you better move into money markets because you're going to need the liquidity.
Yeah. All right, Kathy, you're next. Go ahead.
Yes, you just kind of answered my questions. I've been saving bonds for my kids since they were about 4 and 5, and I have a son that will be college age in 6 years. And I'd like to accelerate it, and can you offer me any help?
How old is he?
He's 11 now.
So he's about 7 years away.
Yes.
What I would start doing is I would start moving out of your growth portfolio, if that's what you've already done, into the bond situation. As the child gets older, move shorter and shorter into a bond. But again, make sure you're doing it through a mutual fund. I wouldn't do it on your own. You need to establish really a balanced fund at this point.
Okay. We have Eugene in Florida, last but not least. Hi.
Hello. I'm currently a college student right now, and I received 2 grants right now, and I get a pretty good amount to cover my expenses. And I received a notification, a mail pamphlet, saying where if I send them $49, they'll tell me about grants that are unclaimed that you mentioned earlier in the show. I'm wondering, should I invest in that, or is that a waste of money?
All right, good
Thank you for taking my call.
Sure.
I would go take the information to your school and ask them if they know if this is a reputable place or not. That's the first stop I would go to. They will probably have services for free in your school that will also do unclaimed grants.
Okay. Always a pleasure, Neil, and enlightening. Thanks. We've been speaking with Neil Godfrey. She is president of the Children's Financial Network. A reminder, the advice given on Money Talk comes from our guests and not CNBC. If you want to learn more about this topic, tune in tonight, the evening edition of Money Talk at 7:30 Eastern. Sue's back, and Money Magazine senior editor Eric Heldman will also be here with ideas on how to invest for college. And don't forget the evening edition of Buy, Sell, or Hold. Tonight, Hugh Johnson will be here at First Albany. That's the evening edition of Money Talk at 7:30 Eastern Time. When we come back, more Money Wheel with Dean and Sue. Don't go away.
You see, I figured it was another tie. But when I open the box, I see this thing that looks like a baby typewriter. She says it's a Brother P-Touch. She says it's a new electronic labeling system that makes adhesive labels in 5 sizes, 4 styles, and lots of colors. First, I label file folders, computer disks, my videotapes. I can't... You gotta help me with this problem. What problem?
Now there's an investment tool that provides things bank accounts, CDs, mutual funds, and other investments can't provide. The tool is stock options. How can options help you pry up new profits or hammer down investment security? To find out, call 1-800-952-TOOL for your free options videotape, guide, and disclosure document. Options involve risk and are not for everyone, but the options tool might help you hit your goals right off the head.
In today's business world, it's not uncommon to shell out a significant investment only to come up empty, or to find out your chances weren't as good as they once seemed. Well, for a limited time, Fortune Magazine is going to give you a free shot at success. No tricks. Just call this toll-free number right now and you'll get the latest issue of Fortune Magazine free. That means a free look at the most insightful, in-depth, and in-step business publication of our time. A free look at the hottest trends, the biggest success stories, and the people who make it all happen. If Fortune isn't for you, simply cancel and pay nothing. The free issue is yours to keep with no further obligation. But if you like what you see, you'll save over 50% off the newsstand price on your special trial subscription. That's 14 more issues, 15 in all. Issues like the celebrated Fortune 500 and Fortune's Annual Investor's Guide, all for 3 monthly payments of only $9.77. Call now, and with your paid subscription, you'll also get the Fortune Portfolio, absolutely free. The Fortune Portfolio puts the office at your fingertips. It's a handsome briefcase with convenient pockets that hold all your important papers. Inside, it features a full-function calculator, a telephone address book for listing key business contacts, and a handy writing set. It's perfect for business trips, meetings, and seminars. So no matter where your business takes you, you'll have everything you need. Best of all, the Fortune Portfolio is yours free. Call now for a free look at Fortune Magazine. You'll enjoy over 50% savings on your trial subscription. You'll get the Fortune Portfolio free. And even if you decide Fortune isn't for you, you'll get to keep your free issue. You just can't lose. It's a free trial issue, over 50% savings, and the Fortune Portfolio free. So call right now and take a free shot at success.
At 8 Eastern, Steals and Deals uncovers the best buys and exposes the rip-offs.
Here's a look at the guests coming up today on CNBC.
Welcome back to the Money Wheel. It's about 16 minutes before the hour now.
And trading in the credit markets, what little trading there was today was in the futures side. The cash market closed for the Columbus Day holiday. The futures markets, however, carried through with Friday's bullish performance and challenged the contract high for the December contract, which is at 120 and 30 seconds, came all the way up to 120 and 26 seconds before some light profit taking took the market off of its best levels of the day. The market settled down 1/32 at 120 and 20 seconds, and the market performance was rather lackluster, very light volume. A lot of traders don't trade the futures market in bonds, T-bills, Eurodollars, and some of the other financial instruments when there is no credit market to peg that performance to. Now, in terms of the jobs report, today, Knight Ridder Financial put an interesting article out in terms of perspective on whether or not the rally by the market on Friday and also in today's futures market action wasn't somewhat overdone. A lot of analysts are questioning whether the 30-year didn't overreact to that, especially given the fact that the market rallied going into what is essentially for the credit markets a 3-day holiday. The market is also focusing on M2 money growth, with M2 expected to be reported expanding at a 4.5% annual rate in the September period, and that should come out late this week, early next week. That may be another factor which could hit the bond market and take some steam out of the recent rally that we've seen in Thursday and Friday's trading, primarily because M2, although it is not necessarily the only aggregate that the Fed watches, it is one of the more important aggregates. And as a result of that, if we do have an expanding M2 money supply by about a 4.5% to a 5% annualized rate, that may take some of the impetus away from the Fed to hold steady or even lower interest rates in the near term. In terms of other factors affecting credit market performance earlier this morning on the futures side, we did get a slight boost from the CRB index, which is up only about half a point or so. The oil market remains relatively subdued today in terms of price performance and pushing the upside of its resistance levels. So the market was fairly quiet throughout the trading session, and as I mentioned, volume was relatively light. The Fed is expected to add liquidity tomorrow when trading resumes in the cash market and the Treasury market, the Treasury opens again. The Fed is expected to do an overnight system repurchase agreement or a $1.5 billion customer repurchase agreement in response to bridging the gap over this 3-day holiday weekend, because most of the banks are closed, so there will be some pressure on the markets in terms of the Fed funds rate tomorrow morning, and that's a look at the latest on credit.
Okay, thanks. And when we come back, we'll have this hour's winners and losers for you, including a recent high flyer in the IPO market, which is losing some serious altitude. We'll also have today's real estate tip.
Attention! Here's a no-risk, try-it-for-free offer from Investors Business Daily you can't afford to pass up. If you call now, we'll send you Investors Business Daily for 2 weeks absolutely free. And with your free trial subscription, we'll also send you 2 new audio cassettes that could help you spot new business trends, free, recorded by William O'Neill. Call 1-800-453-7800. That's 1-800-453-7800. Please call now. That number once again is 1-800-453-7800.
How many stock and option trades do you make yearly? More than 40? Then as an active trader, Spartan Brokerage from Fidelity Investments is your window of opportunity. With deeply discounted commissions, up to 86% below full-cost brokers. With additional 10% savings when you trade by touch-tone phone or personal computer. With an additional 10% monthly commission credit when your commissions reach a minimum level. And with some of the lowest margin rates in the business. Most important of all, you get excellent service from professional Spartan brokers who know the special needs of active traders. So if you make large or frequent trades, get deep discounts plus the financial strength of Fidelity. For your free fact kit on Spartan Brokerage, call 1-800-342-1118. Spartan Brokerage from Fidelity Investments. Call 1-800-342-1118.
Chuck Daly for Sharp. In basketball or business, you got to know what your players can do for you.
That's why Sharp has a winning game plan for copiers. This booklet will help you find the right copier to increase productivity and reduce operating expenses. Whether you get a new Sharp high-volume copier system or a compact copier that lets you add on as your office needs grow. So call 1-800-BE-SHARP now and get your winning game plan, because Sharp's got the players you need to win.
Did you know there are 200 stocks in here that have raised dividends every year for the past 10 years? Do you know which ones they are? Is it this one, or maybe this one? We could be here a long time. Would you like to know? Then call Quick & Riley at 1-800-452-9523 for our exclusive dividend study. They're all in here. 200 stocks that have raised dividends every year for the past 10 years. And it's free when you call. As one of our 650,000 Quick & Riley investors, you can look forward to unbiased information like this every day, not questionable advice. When you call, you'll also get the full story on our new breed of broker, a personal broker who works on salary, not commission, and who saves you up to 76% over full-cost brokers and up to 30% over other major discount brokers. Still like to know? Okay, here's one. to get the other $199. Call now for our free dividend study at 1-800-452-9523. Quick and Riley, a new breed of broker.
In today's real estate tip, mortgage rates. They've been largely in a holding pattern for the past 2 months, but real estate correspondent Bob Pisani says there are still bargains to be found.
Mortgage rates dropped only slightly this week. The national average for a 30-year fixed-rate mortgage came in at 6.87%, the 15-year at 6.39%, and the 1-year adjustable-rate mortgage at 4.28%. 30-year rates have been moving in a very narrow range for the past 2 months, from our 25-year low of 6.82% September 9th to just below 7% at the end of August. Most mortgage bankers I have spoken to feel that rates will continue to move in a very narrow range for the next several months due to continued sluggishness in the economy. That doesn't mean that there aren't any bargains out there. According to HSH Associates, there are 600 lenders offering 30-year mortgages at 6.5% or below. Most will cost you 2 to 3 points. On adjustable rate mortgages, there are 80 lenders at 3.5% or below. So if you're thinking you've missed the refinancing boat, there's still plenty of opportunities. I'm Bob Pisani with today's real estate tip.
Here's a look at this hour's winners and losers. Atlantic Coast Airlines shedding 3 points. Traders tying the drop to recent disclosures by the regional carrier. The company today saying its load factor plunged to 44% in September, down from better than 50% last year. Also known as yield, the number measures the percentage of seats filled by paying customers. Atlantic Coast citing higher frequent flyer redemptions in the period. The company also said on Friday that third quarter net would come in below expectations. Atlantic Coast operates as United Express under a pact with United Airlines. The company came public in midsummer, soared to 17 before nosediving to current levels. Moving on now, Bush Industries rising 1 1/4 to 24. That's a new all-time high and up from a 12-month low of just 7. The company saying third quarter net more than doubled on a 30% jump in sales. Bush makes ready-to-assemble furniture. And Rydell Environmental shares have been nearly cut in half, tumbling 1 5/8 to 1 7/8. The company forecasting third quarter and full-year losses, adding revenues from its remediation business are about 20% below expectations. Rydell provides hazardous waste site remediation and cleanup.
Well, whether you're looking to make a sale or clinch a deal, it pays to really know the players. Mark McCormack, the founder and chairman of International Management Group, explains in today's Success Secret.
I'm a big believer in selling an idea into a company from the bottom up. That is, get the mid-level employees excited about your concept and let them sell it to their bosses. But it can be dangerous to put too much faith in the so-called proper channels. The chain of command at most companies has a lot of twists and turns that outsiders don't always understand. Sometimes following that chain can set you back. I recently learned that one of our executives was trying to sell a sponsorship program for one of our events to an oil company. His contact was a high-level executive, let's call him Mr. Smith, who happened to have been the assistant to the former chairman of the company. Now, I happen to know the current chairman, and I asked him if we were on the right track with Mr. Smith. He told me that he was not the biggest fan of the previous chairman. His point was that anyone riding in on the coattails of the old chairman was not going to score points with him. The fact that one of the old chairman's cronies was promoting our idea probably hurt more than it helped. We had picked the wrong horse to ride. A little research and a lot less faith in the chain of command could have minimized this mistake. I'm Mark McCormack with today's Success Secret.
Success Secrets, brought to you by the Mark Hotel.
The Mark. 120 spacious rooms and suites. Luxury.
elegance, privacy, tranquility, exclusivity. The Mark. For reservations, call 800-THE-MARK.
On the futures markets, a number of the markets today had abbreviated sessions because of the Columbus Day holiday. That, of course, includes the currencies and also the T-bond futures, which we told you about earlier. But in terms of the oil market, although crude oil has been relatively quiet today, natural gas futures are moving higher because it's become pretty cold here on the East Coast. That's boosting prices in that arena. Here's a look at the latest on the futures.
Well, even though most of the futures action is out of the way, they're still trading in New York, though we can't tell you why. The Dow Industrials are currently up just 4.5 points. It's very slow, and Brett is dead even. That is it for this hour of the Money Wheel. Thanks for joining us. I'm Dean Shepard.
And I'm Sue Herrera. We'll be back tonight, 6:30 p.m. Eastern Time, 3:30 Pacific for business tonight. We'll wrap up the day's trading for you.
We're awfully glad to have you back. It's been getting lonely up here.
It's nice to be back.
In the meantime, stay tuned for the next hour of the Money Wheel with Bill Griffith and Neil Cavuto. We will see you again tonight.
It's business news featuring the movers and shakers making the news. It's Wall Street, it's Main Street, and it is always front page headlines. So when you're looking for the newsworthy events to the major issues, look for Business Insiders.
Medical rationing. Will it be necessary under President Clinton's health care reform plan? Plus, Paramount's board meets today to consider QVC's $9.5 billion buyout offer. Tonight on Business Tonight.
Tired of paying high commissions? I don't blame you. There's absolutely no reason why a knowledgeable investor should have to pay a full commission broker just to enter orders, especially when you can use our AccuTrade system and only pay 3 cents a share commission. It just makes good sense. For instance, buy 3,000 shares of a $20 stock and pay a commission of $90, just 3 cents per share. And with AccuTrade, you can enter orders and obtain quotes 24 hours a day, 7 days a week from anywhere with just a simple touch-tone phone. It's easy, and it's fast. Pull out your last monthly statement from your full commission broker and compare not only the commission rates, but also take a look at all those extra charges. They add up. If you're doing all the work, maybe it's time to pay yourself.
You only need a minimum of $5,000 equity to open and maintain your account, and the minimum charge is just $48. Call this 800 number today and connect with AccuTrade, America's deep discount broker, member SIPC.
CNBC's Market Wrap is comprehensive, in-depth market analysis. Market Wrap is the hows and whys, the ups and downs, the winners and the losers. Market Wrap is far-reaching, late-breaking market news after the closing bell. It's Market Wrap, a recap of the day's global events and the impact it has on the world's markets, Wall Street, and you. Market Wrap, covering the world's business is our business. Weekdays on CNBC. Money all day, talk all night.
Welcome to this hour of the Money Wheel, everyone. I'm Neil Cavuto. Bill Griffith is on assignment. Here's what's going on. Shares of the nation's largest semiconductor maker are spiraling downward at this hour, off better than 3 points at $67 a share. Here's what started it all. Even though the company is saying that it sees strong fourth quarter PC sales, and the first quarter should also be boosted by some new products, including the widely anticipated Pentium, Intel reported its third quarter earnings today stood at $1.33 a share. That was right in line with estimates, compared to 56 cents a share in the year-ago period. However, gross margins, which are now eclipsing the 60% level, could be taxed in the future quarters. In other high-tech news, Sun Microsystems says that it will begin selling directly the microprocessors that power its computer workstations. Sun, the nation's biggest workstation company, said that it plans to sell the competing computer and electronics firms. Eli Lilly said that it plans to cut a total of 4,000 jobs, about half by the middle of next year, and the remainder over the next several years. As a result, the company says that it will take a special pre-tax charge in the fourth quarter. Eli Lilly is also projecting third quarter earnings of between 98 cents and $1 a share due to some previous cost-cutting programs. Its chairman, Randall Tobias, says that the actions are the first in what he expects will be a series of moves to achieve stronger long-term growth. Shares of Lilly are jumping, though, and a rally in the drug stocks in general. Right now, taking a look at how the shares are faring, up 2 5/8 at 53 3/4. There is big interest in drug shares today, particularly the generic drug market, after yet another consolidation in the health industry was announced. Copley Pharmaceuticals said that it has agreed to be acquired by Germany's Hexcelanase for about $546 million. Hexcelanase, a unit of chemical company Hec AG, will get a 51% stake in the generic drug maker, which had sales of $52 million in its latest fiscal year. Copley stock at this hour is trading down 3 points at 46 3/4. Let's take a look at how some of the others are faring. Zenith Labs up better than 4. PurePak is ahead 3/4. Marshall Pharmaceuticals ahead 2 1/4. And Roberts Pharmaceuticals at 35 1/4 is up 2 points as we speak. Paramount continues to be in the midst of a merger storm. The company says that it is proceeding to complete its merger deal with Viacom, while at the same time Paramount is pursuing talks with QVC Network about its unsolicited buyout offer. The Paramount board has been under increasing pressure to consider the $9.5 billion bid by QVC, which is about $2.2 billion over Viacom's offer. Paramount said that the talks would be aimed at evaluating numerous aspects of the cable shopping network's proposal, including any regulatory restraints. Paramount shares at this hour are up an eighth at 76 7/8. QVC down 5/8 at 55 7/8. And Viacom Class B up 1 1/2 at 53 1/4. Turning now to some international news, an earthquake measuring 7.1 on the Richter scale jolted Tokyo and a wide area of Japan early Tuesday morning. The quake, which struck at 12:55 a.m. or about 12 noon our time, was shaking Tokyo and nerving Yokohama, the strongest, but it was felt as far away as Japan's northern island of Hokkaido, about 500 miles to the north of Tokyo. Japan's NHK television said that there were no reports of injuries or damage. Interesting just the same that Russian President Yeltsin is visiting Tokyo today, but there was no word on how his plans were affected. Meanwhile, in Somalia, the UN envoy to that country is hoping for a ceasefire by militia following a show of force over Mogadishu by U.S. warplanes earlier today. At the same time, U.S. troops in the multinational peace mission received a hostile reception today in Haiti when their warship was blocked from docking and embassy personnel were chased away from the port by an angry mob. The UN mission has stirred fears among U.S. lawmakers and citizens following the deaths of at least 15 Americans in Somalia over just the last 2 weeks. The Columbus Day holiday is making trading a little thin today and a little nervous as banks and government offices are closed, as well as the Federal Reserve and the U.S. bond market itself. But the remainder of the financial markets are open, and let's see what effect that's having on the markets as we speak. The Dow is up about 5 now, 35.89.77, with the transports ahead nearly 18 points at 16.44.16. Energy prices are up just under a dime right now at 18.64 a barrel. The utilities down. It's a little tough to trade in utilities, especially for those who arbitrage against the two, especially in the cash bond market. Down a quarter now at 243.54. Rounding out some of the other market averages we follow for you. The big board composite ahead a half at 256 and a quarter. 123.8 million shares changing hands. So this looks like it will be a softer trading day than many of late, given the Columbus Day holiday. It's almost split between gainers and losers. A 34-issue margin in favor of gainers, though. 688 issues presently unchanged. Elsewhere today, here's what we got going for you. The S&P ahead 3/4, the Amex up 2 2/3, the Nasdaq ahead 3 1/4, despite what appears to be a bludgeoning in the semiconductor issues. Intel chief among them, off better than 3, as we've said, at 767.5 on the Nasdaq. Let's take a look now at some of the stocks that are in the news today. Fleet Financial Group, the nation's 15th largest bank, will acquire Sterling Bank shares in a stock swap deal valued at about $125 million. Sterling shares originally surged on the news. They have not looked back. They're up about 5.5 points at $36, while Fleet is getting a good deal of market attention as well. It's down an eighth at $34 a share. In another acquisition move, Fruit of the Loom said that it plans to purchase Salem Sportswear for $136 million in trading. Fruit of the Loom right now is down 5/8 at 30 1/2. And Salem, by the way, is up 3 1/8 at 12 3/8. Tyco Toys said that third quarter profits will be much lower than anticipated and that the company will post a loss for the year. The toy maker, the nation's third largest, earned 51 cents in last year's third quarter. Tyco shares are now down 7/8 at 12. Okay, up next on View from the Top, an interview with a man who is making a pretty penny off a full head of hair. I'll be talking to Cy Sperling, Chief Executive Officer of none other than the Hair Club for Men, after this.
Alfa Romeo 164 LS has arrived. Unlike these cars, it has a more powerful V6 engine with 24 valves, 210 horsepower, and legendary Alfa Romeo handling. It's something that will no doubt have our competition worried. Very worried. Call toll-free for your nearest dealer.
They were a hard-driving sales organization, but accidents were putting profits in reverse. So Liberty Mutual took an unusual route, directing our client to Liberty's Fleet Training School. They learned to drive defensively. Net, accidents have been cut by 50%. Now the only bump they'll see will be on their bottom line. Liberty Mutual, facing the issues that face our customers.
I was going over my bank statement, and I saw that my rates had never been so low. This is all I'm earning?
Common sense says you can't always depend on yesterday's solutions.
You've got to be kidding.
Fidelity Investments, America's largest mutual fund company, has the alternatives you may be looking for.
Are you sure you don't have time for lunch? I got to go to the bank. Okay, I'll see you. I was on my way to renew my CD. But when I saw those rates, well, lunch sounded pretty good. Lunch, anyone?
Fidelity Investments can offer ways to help your savings earn more.
Oh, the rates on this thing? Yeah? I couldn't afford lunch.
That's why over 3 million people come to Fidelity for a wide range of investment choices, including mutual funds and discount brokerage. So call Fidelity now for this free guide, Common Sense Alternatives to Low Bank Rates. You'll also receive everything you need to start. Call Fidelity now at 1-800-248-1003. Fidelity Investments. Common sense. Uncommon results.
I'm Bill Griffith. Tonight on Your Portfolio, the first of a special 5-part series featuring some of the leading mutual fund companies in Boston. We'll take a look at Pioneer, a Beantown institution with a commitment to value investing. That's tonight, 7 Eastern. Join us. Whether college tuition bills are off in your distant or not too distant future, it may pay you to watch the next Money Talk. Smart ways to invest for college, your phone calls, and buy, sell, or hold tonight, 7:30 Eastern on CNBC.
Strong, spirited conversation. Equal time with Mary Maplin and Jane Wallace, 8:30 Eastern.
Welcome to View from the Top, everyone. I'm Neil Cavuto. You know, whether you have been blessed with a full head of hair or happen to be a little light in that department, chances are you've seen the hair replacement infomercials made famous by Cy Sperling. And if the name Cy Sperling doesn't ring a bell, perhaps this will jog your memory.
I'm not only the heckler president, I'm also a client. If your hair is thinning like mine was, call now for your free video.
The first thing my wife said when she saw it, that I looked 10 years younger. That was the first words out of her mouth.
I've memorized these. I don't know about you. Cy Sperling is the founder, the president, the chief executive officer, and as he says, the client of the Hair Club for Men. And he joins me now to talk about his hair replacement dynasty, industry, you name it. Good to have you with us.
Thank you, Neil. Thanks for the invitation.
You made yourself almost like a cult figure on late-night TV with these commercials. How much business do you think that alone has generated for you?
Well, all of our business is directly related to the, well, now it's prime time also, but we started strictly late night. And, and it was amazing because when I first did my commercial, I think the commercial cost about $5,000 to do.
Yeah.
And the spots, late night spots, was costing at that time about $50 a spot. So it looked like we were this terrific company, you know, like this major institution selling hair. But the fact is that it was a mom and pop organization. I started with a few $1,000s on my credit cards originally. And
right. With
today,
you and your wife, if not.
My wife and I, right. And today we're in 60 cities. And within the next couple of years, we'll be in every city throughout the United States.
Now, this is a hair process, I guess, is the technical way you refer to it. It's not just a toupee or anything like that. This is bonded hair, essentially.
Well, you see, what we did was very comparable to what Bausch & Lomb did to the corrective eyewear industry when they came out with the contact lens. Right. Like, in other words, you didn't have to take your eyeglasses off anymore. Or I would compare our product also with crowning your teeth or capping your teeth. Our product doesn't come off, whereas a toupee is removable, and that is probably the #1 reason for our success.
But it is pricey. I don't know how these compare with other options that are out there, but from $2,000 to $3,500 a pop, it's not cheap, right?
But if you think of it this way, that a good toupee would probably cost about $1,500, and a toupee it's always questionable as to whether it's going to look natural or not.
Yeah.
At least with our product, you know, it feels and looks like your own hair. You could live a normal, active lifestyle without having a fear of the hair coming off.
So all that stuff with you guys swimming with that stuff, it stays on there.
It's legit. As a matter of fact, this weekend I'm going to be on Lifestyles of the Rich and Famous with Robin Leach.
That's almost as good as being here, huh?
Well, what is this, View from the Top?
Now, all right, so you will, the idea is that this is something that has some staying value and is worth the extra dough for it, right?
Well, that's really the point. In other words, if you can get something that looks and feels like your own hair, where you can run your fingers through it, you could dive into a pool of water, you don't have to be conscious of it.
Great.
You know, that's really important to people who have thinning hair. They're usually very sensitive about it.
Who are you going after now? I know roughly 30 million men are plagued by thinning hair, if not no hair. How big a market are you potentially looking at down the road?
Well, you just said it for me. There are 30 million men who are balding. At some time in their life, they'll develop thinning hair, and that is our market.
Right, right. Well, I'd like to try to see if maybe you can help me put some of this in perspective. What drives someone to eventually make the decision to do this? You were told the Detroit Free Press earlier this year, and correct me if I'm wrong, when a man wants to be intimate with a woman, he doesn't want to wake up and have to say hello to his hair hanging on the bedpost. How much of this is sexually driven?
Well, I think it's probably all sexually driven. I mean, you know, for the same reason that a woman wears makeup in the morning, even if a woman is married, she likes to be, when she goes to work, she likes to get compliments. You know, like, and you know, if there were no men on earth, I don't think women would wear makeup. And conversely, if there were no women on earth, I don't think men would do this. So I think men do this because they want to look younger and they want to look more attractive. And we do a lot of younger people who have lost their hair prematurely, and then when they go out socializing, they're meeting women in their 20s. They don't want to feel like they're 45 when they're 25.
Yeah.
And when you're trying to relate to a younger woman, you know, she'll perceive baldness with age. In other words, if you lost your hair, even though you're a nice-looking man and you have good features and you're in pretty good shape, if you lost your hair, you would probably look 10 to 20 years older.
Right.
So that has a lot to do with why people come in to see us. They want to maintain their youthful look and look younger, and it does affect their social life and their self-confidence level.
Then why not go public? Why not take this to the next level? If you're dealing with, and I understand from press reports, you're looking at $15 million or so in sales, right? Or is it a little better than that?
We're projecting somewhere between 60 to 75 million over the next 12 months in sales.
Okay. Couldn't you go much further than that? Now, you say you're eventually going to be in a lot more cities within the next couple of years.
Well, we're going to start to franchise now, and I think once we start franchising, it'll be going public will be the next step. I think within the next 24 months, we'll go public.
You will.
Sure,
You
yeah.
anticipate going, but why not take advantage of what has been a heck of an IPO ride now? 2 years from now, it might be dicey.
Well, we also want to make sure that our earnings are right.
Yeah.
In other words, we've used a lot of our cash flow for expansion. You know, so we haven't shown that great of a bottom line. But once we start franchising, there'll be a lot of our cash flow will go up substantially, and I want to make sure that we're going out at the right time.
Now, I guess it can cut both ways for you, Mr. Sperling. I know you have actually taken a lot of the spoofing that's been done on you and Jess from the likes of Jay Leno and Saturday Night Live. Does it ever work against you that some people look at what your company as a bit of quackery, rightly or wrongly, because it spoofs so much?
Well, I hope not. I mean, I take it. I mean, even though I kid around about it also, I take it very seriously. I did it originally because I lost my hair at an early age, and I had gone through a divorce at the time, and it had a very adverse effect on my self-confidence level, and that's why I did it. And I really believe in the product. And we recently came out with a hair club for kids, where we do kids between 12 and 18 who have lost their hair through chemotherapy or radiation. We don't charge for the service, and we invite people nationwide to bring their kids in, and we've turned lives around. I mean, I've seen kids that won't go to school because they're being teased by their peers, and they're very, very, very affected by their hair loss, and we've done the hair, and they go back to school, they live a normal life, and this gives me a tremendous pleasure. And
all the spoofing is free publicity for you, too.
It's free publicity, but I think when I'm on TV a lot, and I think people realize that I'm sincere about what I'm doing. They look at my hair, they see my before shot, they know I'm for real.
Yeah. All right. Well, it's been a pleasure having you on.
Well, thank you, Neil.
Cy Sperling, the president, Hair Club for Men.
Thank you very much.
All right. When we come back, we're going to open up our Market Mavens file for today. We'll see how Demolition Man demolished the competition at the box office this weekend. A lot more coming up. Stay with us.
Cameras in order to give you a closer look at the fit and finish of our Lincoln cars. To achieve this kind of quality, we not only employ technologically advanced machines, we also employ dedicated people who bring to Lincoln a craftsmanship that can't be duplicated by a mere machine. Sorry, fellas. Lincoln, what a luxury car should be.
Independent investors, take note. Deep discount broker Jack White & Company offers a commission schedule averaging 50% less than Charles Schwab, plus a no annual fee IRA, a no annual fee cash management program, and a no transaction fee service on selected mutual funds. To begin saving on commissions averaging 50% less than Schwab, call 1-800-431-3500. Jack White & Company, serving investors for 20 years.
Now we're organized.
With Quicken, we always know exactly where our money's going.
And exactly how much we have.
Yes, Quicken, the world's best-selling finance software and the fastest, easiest way to organize your home and small business finances. If you can use a checkbook, you can use Quicken because your screen looks exactly like your checkbook. A keystroke shows you where your money goes with revealing graphs like income and expenses, budgets, net worth, and more. If you have a PC with DOS or Windows or a Mac, call now.
Special TV offer, just $49.95.
Pulse Investment Company has been a nationally recognized leader in providing equity funding for small-cap companies. We've accomplished this through the issuance of convertible preferred stock. For the serious investor, buying convertible preferred stocks offers certain advantages over owning common stock. Convertible preferred stocks can provide the investor with more security than common stock, capital gains potential, and high yields paying dividends quarterly. To receive our free report on convertible preferred stocks, call Pulse Investment Company at 1-800-848-1082.
Investors, the place to find extraordinary wealth-building investments like these is the New Issues Market, and New Issues Outlook is the single most timely and comprehensive authority available. New Issues Outlook, published every 10 days, gives you incisive news and analysis of all new stock issues weeks before they go public. In each issue, you'll receive advanced full-page reports on every offering within days of its SEC filing. and recommendations on those offerings we rate highest and lowest. New Issues Outlook also helps you identify profit opportunities in the aftermarket, listing the biggest gainers and biggest losers every 10 days, and monitoring the performance of the latest 300 new stock issues, including exclusive price volume charts like these. You'll also receive our proprietary computerized performance rankings of every New Issues underwriter. Call 800-851-1400 and try New Issues Outlook with a full money-back guarantee. As an added bonus, we'll rush you the current edition of our New Issues Performance Directory. That's 800-851-1400. Call now.
Welcome back, everybody. Pretty quiet day in the financial markets, what with the Columbus holiday and all that, but still to check in on market developments as far today. Roy Blumberg, here he is now with his market risk model, a whole lot more going on. Hi, Roy.
Well, hello, Neil. Indeed, it is a fairly quiet day. We did get a rally early on, pushing the Dow to plus 11 points by 10 o'clock Eastern Standard Time. Slipped back to the plus 5 range and have not hovered far from there since. Volume is very slow. Breadth has been narrowing all day. It's just positive now by about 25 issues. Secondaries, electronic instruments, drugs, broadcasting, tobacco, and shoes. Those are all strong sectors. On the weak side, semiconductors, engineering, construction, telephones, aluminums, and the hospital management stocks. Well, as Neil mentioned, we have the risk model for you, and this is where it stands. First, the Fed policy remains positive. We have a 25% allocation to the stock market. We would need 3 increases in the discount rate before this indicator would turn negative. As for our interest rate trend indicator, 2-year government bond yields are about where they were 6 months ago. They have to drop below those yields of 6 months ago to turn positive. This remains negative, and all our indicators have a 0 weighting when they are negative. As for the 10-day moving average of ARMS, an indicator that normally gives a lot more signals in the year. An overbought signal back in May. We've not had any other kind of signal since. Of course, overbought is a negative, and that makes it 0 weighting for the market. As for the S&P 500 trend, we got a negative signal on 9/20 when the S&P 500 went below its 30-day moving average. It is just about at its 30-day moving average and could turn positive again in the next couple of days if the market is a little stronger, but for the moment it is still negative. As for the NASDAQ trend turned positive way back on 7/12. NASDAQ far above its 30-day moving average, making this indicator positive. That 30-day moving average is at the 740 level. As for the Harlan Index 18-day moving average of advances minus declines on 9/21, that one turned positive. 10% allocation to the stock market at this point with a positive weighting. Finally, percentage of stocks above their 10-week moving average. No oversold reading since an overbought reading way back early this year remains negative with a 0 weighting. Overall, Neil, we're 45% stocks, 55% cash. CNBC risk model is essentially in a neutral mode, and again, considering the lack of volatility in the market, I would say a neutral mode's just about right. Back to you, Neil.
Okay, Roy, thank you very much. Roy Blumberg. All right, in our Market Mavens file this afternoon, Jim Wells says that risk is still a little high. Kevin Freeman is a solid bear, but Bernie Schaefer thinks that the best is yet to come. Here's Mark Haynes with the details.
At Fund Profit Alert, Bernie Schaefer sees a lot of positives, like the improving economy and loads of skepticism towards stocks. He also likes the record inflows into mutual funds and upcoming favorable seasonality. Schaefer says all that spells explosive upside potential for the stock market. He says he's looking forward to further gains from stocks. At the Personal Capitalist, Kevin Freeman says he is now solidly bearish because stocks are extremely overvalued by nearly every measure. He adds that low interest rates and low inflation have already been discounted into the current price level. Freeman says what happens if either rises unexpectedly? Stock prices would get hammered. He says former CD money could rush out of stocks very quickly in the face of a correction, worsening any decline. And at the Financial Commentator, Jim Wells says the fact that so many find money market funds so distasteful is an important piece of information. He says over time, buying what everyone does not want has usually paid off handsomely. Wells says stocks have been in a high-risk zone since early this year. He says there's potential for the NASDAQ composite to fall between 10 and 13%. Mark Haynes, CNBC.
Okay, tomorrow at this time, the latest thoughts on the market from Charles Allman. We'll also have Charles Carlson and Street Smart Investing, all that coming tomorrow. Warner Brothers' futuristic action film Demolition Man is blowing up the competition at the box office, and industry sources are calling it the biggest October opening ever, grossing an estimated $14.3 million. The film is the latest release from mega producer Joel Silver, who has one of Hollywood's best track records of this genre. Jerry Cobb has this look at the force behind Demolition Man and his formula for success.
Elaborate stunts and expensive action scenes are hallmarks of Silver's films, and Demolition Man is no exception. Although he's been called the Selznick of schlock for making movies that are long on violence and short on character and plot, Silver insists he isn't trying to make art, just entertainment.
We make formula movies. Now, I mean, I'm not saying that in a bad term. I mean, there are good guys and there are bad guys, and the bad guys do bad things, the good guys chase them, and the bad guys lose and the good guys win. I mean, that's just a formula.
And that formula has worked well for Silver. While he's had his share of box office bombs like Hudson Hawk and Ford Fairlane, a string of blockbusters like 48 Hours, the Lethal Weapon trilogy, and the Die Hard movies have made him one of Hollywood's most successful producers.
Hi, Sam. How you doing?
Collectively, his films have earned over $1 billion, but money isn't what drives him.
I once asked Joel if he would take $1 billion cash right now, but the one stipulation would be he could never produce another movie. And he balked. He balked because there's no way. It's in his blood. He's possessed. He's driven. He's got this kind of blissful madness.
And you can feel it on the set.
So we open up with the whole world. Right. We clear on that? We'll be there. Everybody happy?
He is a man addicted to the controlled chaos of movie making.
In our business, the only thing that I maintain as a constant is that everything is a variable. That any day, any given permutation of any problem can go either direction, so you really never ever know. It's like, you know, riding a bucking bronco.
And for Joel Silver, that bronco ride ends here at the box office, where audiences will pass the final judgment on whether his latest effort is another blockbuster or another bomb. Jerry Cobb, CNBC, Los Angeles.
Well, obviously it was not a bomb, as we've just said. At $14 million in its opening week, it most certainly is another blockbuster for the moment. Okay, still to come on the next half hour of the Money Wheel, CNBC's chief commentator Bill Seidman will be joining us to discuss why the prime lending rate hasn't gone down, even though some banks are trying to lead the way. After this.
Investors Business Daily readers have the highest income and net worth of any American business newspaper or weekly business magazine. That's according to Mendelsohn Media Research. Now, why do you think people who can afford any business publication read Investors Business Daily? Because we're the only national business newspaper with exclusive information for people who want to make money.
Receive 2 free weeks plus 2 audio tapes. Call 1-800-767-5900. That's 1-800-767-5900.
I want the best information I can get without paying a premium for it. That's why I chose Signal Delayed. For a low monthly fee, I receive data from all the major markets just 10 to 30 minutes after the trade occurs. And I get real-time indices for free. Signal Delayed delivers accurate, reliable quotes over TV cable to my PC. It's easy to use and helps me make informed trading decisions. Order Signal Delayed today and you'll receive 4 free weeks of Signal reports. Call now, 1-800-833-2858.
If you trade futures with a full commission broker, these commission rates may seem all too familiar to you. And if you make your own trading decisions, we believe these rates are downright outrageous.
You should know how over 20,000 futures traders have been saving as much as 80% on their futures commissions. At Lind Waldock, our philosophy is to give traders the fast, accurate service they need at prices that make trading affordable. You may be surprised to learn that we give you both discount commissions and premium service. But you won't be surprised that we're the largest futures discount firm in the nation. So if these numbers look a lot more reasonable for your trading, call Lind Waldock, and you'll get the savings and the quality services that have made us #1. Call Lind Waldock, the nation's largest futures discount firm.
Call toll-free 1-800-445-2000.
Welcome back to this hour of the Money Wheel, everyone. I'm Neil Cavuto. Here's what's going on. The headlines topping the half hour: layoffs, earnings, and mergers leading the news from the corporate world. Drug maker Eli Lilly says that it will lose 4,000 positions over the next few years. The company will offer early retirement packages to some workers and then reduce the rest through attrition, and then cuts in temporary workers to follow shortly thereafter. Analysts say that Lilly is positioning itself for business after the government's final version of health care reform kicks in. Shares of Eli Lilly jumped early on trading and then have currently not looked back, up about 2 7/8, now $53 a share. Shares in Intel going quite the opposite direction. The world's biggest maker of microprocessors dropping in early trading despite a 143% jump in third-quarter profits over the same period a year ago. The company says the third-quarter sales total nearly $2.25 billion, and earnings per share came in at $1.33. That was right in line with expectations. Intel is currently trading at this hour down 3.25 points at $67 a share, amid some indications that maybe those fat margins at 60% plus could be pared in future quarters. The management of Paramount Communications is examining QVC Network's $9.5 billion acquisition bid at the behest of its board, but its merger deal with Viacom is apparently still in the works. Paramount released a statement calling the talks with QVC informational and says that the two companies are exploring issues of regulatory restraint, the valuation of QVC stock, and a time frame for clinching the deal. Paramount right now is down an eighth at 76 7/8, and QVC is down a quarter at 56 1/4. And finally, news that an earthquake hit Tokyo today. There are no reports of damages or injuries or even fatalities, but the quake does come on the heels of a visit by Russian President Boris Yeltsin. He's in Japan looking for some financial aid for Russia. It's his first step abroad since he crushed domestic political opponents earlier this month. Well, let's take a look at how the markets are interpreting all of these cross developments on this Columbus Day holiday. We're up about 8 on the Dow, up about 7 3/4 on the transports. Utilities are down a half a point. Breaking things down further, the big board composite as we speak, which had been up nominally on the day, is at this hour up a quarter, up actually 3 points here at this hour, up 2/3 of a point, 256.44, 134.5 million shares changing hands. Advanced decline ratio favors gainers over losers by about a 50-issue margin. We've got 678 issues unchanged. Broader market averages are all up, with the S&P up about a point. The Amex notching on another 3 points. The NASDAQ, despite the bludgeoning in some of the semiconductor stocks, ahead 3 points at 761.31. A lot of the help here is coming from some of the biotech issues. Is the credit crunch caused by bank lending rates or by business demand for loans? Many banks are now saying that lowering interest rates isn't worth it. CNBC's chief commentator Bill Seidman joins us this afternoon from our Washington bureau with his take on all of this. Bill, good to see you.
Hi, Neil.
What about this issue? You know, you argue it's either the bank's not doing the lending or the consumer's not doing the borrowing. I know this gets to be the old argument of the chicken or the egg. What is it?
Well, I think we found out it's the chicken. The fact of the matter is that banks don't want to cut their prime rate because they don't believe they'll get any additional loans if they do. And if they cut their prime rate, they'll have to cut it on all the loans they have outstanding. I've talked to several bankers, and there would be a very substantial drop in their earnings if they cut the prime rate unless they attracted more loans. And they just don't think the loans are out there. They don't think pricing is the problem. The problem is the uncertainty, largely caused by all the programs that the Clinton administration has put forward.
Well, that seems to echo a New York Times article today, Bill, that you might or might not have seen. They quoted one of these many bank representatives, in this case a spokesman from Chemical, who said, and I'm quoting here, simply stated, my customers don't borrow more because we lower rates. They borrow if they see an opportunity to use the borrowed money, and right now they don't see that opportunity. Is that what it comes down to, that right now there's not enough confidence in the economy?
Well, rates are certainly important, and I think the reason they're not borrowing is twofold. One is demand is very low because of uncertainty, and secondly, they're not borrowing from banks. Banks have got a tremendous amount of competition out there in the way of lenders, and so they're losing some of their marketplace as well as having a very slack demand.
All right, but the argument had been for some time that the prime rate remained largely stuck at its present level despite what had been quite a few cuts in other key rates, and that the banks more or less ignored this. What do you make of that?
Well, what I make of it is that a couple of the small banks tried to cut the prime, as you remember.
To little avail.
Nobody followed. And if you look at a bank's margins, you cut that prime rate by 25 basis points, and that might take, you know, a good 10 to 15% after their earnings, because it comes right off the top. So unless they are forced to it by competition, they don't do it. Now, the real question is, why don't we have more competition here? Well, the reason is, I guess, that the loans that are on the books are there and there aren't many new ones to go. So they figure it out, and they figure we won't make any more money if we cut the prime rate, so we're not going to do it, and we're not forced to do it by competition.
Well, don't improve earnings and just the nature of interest rates today behoove them from making any move at all. After all, if they can borrow from Uncle Sam at 3% and really do nothing by just keeping the gap that they presently have on their present deposits, they're pocketing money and obviously seeing earnings soar without lending. So there's no impetus to lend, right?
Well, that's part of it, but they know long run they've got to have those loans if they're going to be a profitable business. So their problem is to get through this period without losing the customers altogether and without losing their deposits to mutual funds. Right now, you can say about banks is they're losing lenders and they're losing deposits, and those are the two core parts of their business. So while things look good on the surface, they're going to have to compete for those loans pretty quick.
What about the banks that are now trying to offer mutual funds through their own umbrella? They're trying to keep customers at their whatever way they can to entice them not to necessarily look elsewhere. How effective will that be? Will that continue to beef up what has been very fat and bottom lines over the last couple of years?
Well, I think it's going to help them because they're going to have to be in that business. A lot of the money is going to be there, and like Willie Sutton, they've got to go where the money is. And so it is unlikely that banks will cut back on that. They did over 20% of all the mutual fund selling in the first half of this year.
Good point.
That's still going up. That's going to be a part of their business from now on. What they need to do is get the law changed so they can actually own and underwrite those mutual funds, which they can't do now because of the old Glass-Steagall law.
Right. But there are indications now that certainly within the next couple of years, whatever is left of Glass-Steagall will be just shattered remnants. Is it a given now that what we're looking at here is the slow dismantling then of the traditional barriers between the regular banking and securities activities?
It's been a given for the last 10 years, but it's never gotten done.
You're right, you're right.
And there's a lot of political, you know, forces that are against it, people who are very happy the way it is because you can't get into my business on account of Glass-Steagall. So far, the administration has shown no inclination to get into that fight. If they don't, it'll be here for a while longer.
All right. Bill, always a pleasure. Thank you very much.
Thank you.
Our chief financial commentator, Bill Seidman, out of Washington. Well, all you ever wanted to know about investing in bond funds is next in our mutual fund segment, Your Portfolio. Rob Bluestone, the director of fixed income over at Oppenheimer Capital, will tell you how to judge the bond market and give you some insight into what might lie ahead. All of that after this.
At our large Wall Street brokerage firm, we offer full service.
Excuse me, did you hear what Oldie Discount Stockbrokers is offering?
Now what?
Full service and commission-free trading. It's called Smart Trade.
Commission-free trading? Well, at our
With
firm...
Smart Trade, if you trade 1,000 shares or more, you pay absolutely no commission.
None?
Zero.
Great. Now all my clients will move to Oldie.
Smart Trade, only from Oldie. Why trade with anyone else? Right.
Over the last few years, a lot of people have seen their investments drop in value. Unfortunately, that's life. Our annuities have held their value and consistently paid higher rates than CDs. That's New York Life. New York Life, the company you keep.
I am absolutely not in control of my money whatsoever. I'm pretty good with her money.
Now that I think about it, I'm not in that much control.
I let my wife run my finances.
I'd consider myself fortunate if I was in control maybe 1 or 2 days a week.
Only way I'd be able to control my finances is to stop spending money.
I would love to have a little green man come into my room at night.
A financial advisor.
A rich relative.
And tell me where to invest, where to spend, where to save.
If you want to start getting control of your finances, start by getting Money Magazine. Money shows you how to build your savings, invest wisely, spend smartly, and it's yours risk-free.
Risk-free. Risk-free, yes. Risk-free.
One risk-free issue would be perfect, just to sample it.
I like the sound of that a lot.
Call now. Get your first issue risk-free. You'll see that Money Magazine is the smart, easy way to get control of your finances.
There's got to be something in every issue of money that's worth more than what you paid for it.
I invested a bit of my savings into a mutual fund recommended by Money Magazine.
They give you good, sound advice.
And because of that, I've made a bundle.
I followed the advice and I made some money.
And if you call now, we'll also send Money's exclusive financial guides, a 3-part series that will help you manage your money, build a future, and achieve your dreams. Now they're yours, free.
Free. Love that word, free. Free. Free guides are a great idea.
They show you how to save your money.
All 3 of the guys would be great to hold on to.
They show you how to keep it free and save it for retirement.
Perfect.
Call this number now. Get a risk-free issue of Money and the guides free.
Give it to me now. Absolutely.
If you like your risk-free issue of Money, do nothing. You'll get 12 more informative issues, 13 in all, for just 4 easy installments of only $8.99.
A no-lose proposition.
Or cancel and keep your first issue plus the guides free.
I have saved quite a bit of money because of Money Magazine's recommendation.
Money Magazine has helped me manage my money.
Money puts you in control. Call now. Examine your first issue of Money Magazine risk-free. Plus get Money's financial guides free.
Try Money Magazine for free. I mean, it's at no risk.
You can't lose.
At 11 Eastern, it's Real Personal for an intimate look at life's relationships.
Welcome back to the Money Wheel, everyone, and our mutual fund segment, Your Portfolio. Each Monday, we take a look at the best and worst performing mutual funds of the week just gone by. We get our information from Lipper Analytical Services, which monitors the open-end sector of the market, and from Thomas J. Hersfeld Advisors in Miami. They keep a close track on closed-end funds. Investors continued to pour money into international funds last week, especially emerging market funds. 2 funds which invest mostly in Thailand scored gains over 12% last week alone. So far this year, the Thai fund, for example, has returned 42%, and the Thai Capital Fund is ahead 35% year-to-date. The Singapore fund comes in third with a gain of 11%. The fund's premium to net asset value has jumped from 0 to, get this, 10%. The Emerging Markets Telecommunications Fund rose more than 10%. The fund's biggest holdings include telephone companies in countries like Mexico, Chile, Brazil, the Philippines, and Argentina. The Lexington Strategic Investment returns to the weekly winners list, posting a gain of 10% and 10.25% actually. And topping some of the losers list is the Cigna High Income Shares Fund, which fell more than 7% last week. The fund's premium has shrunk from 17% this summer to 6% right now. A disappointing earnings report from Advanced Micro Devices pulled the plug on the funds invested in semiconductor stocks this past week. Seligman Communication A-shares was off 5 1/3%. 2 of its largest holdings, Synoptic Systems and Cisco Systems, fell 12% and 10% respectively. The sell-off in AMD and Synoptic Systems put pressure on 2 other tech funds as well. Both Alliance Technology Class C and Fidelity Select dropped more than 4%. And rounding out the losers list, the Hyperion 1997 Term Trust, which gave back 4 1/3. Our heavy hitter for today is Rob Bluestone, Director of Fixed Income over at Oppenheimer Capital. His firm is parent company of the Quest for Value family of mutual funds. Currently, assets of its mutual fund group stand at about $4.5 billion. 40% of the assets are in money market instruments, 28% in stocks, 11% in bonds, and 21% in closed-end funds. 140,000 people invest with the Quest for Value Fund. And if you're thinking about adding bonds to your portfolio, Bluestone suggests a maturity range of between 2 and 7 years. That, he says, will help hedge against what he sees as an inevitable correction in the bond market.
I think there is total unanimity of view that rates can only go down. And candidly, as long as short-term interest rates stay where they are, and they are pretty low, Fed funds being around 3%, T-bills around 3%, I think there's a limit to how much the bond market could correct, but I think it is due for some disappointment.
In addition to an intermediate range maturity, Bluestone says that it is crucial to compare investment objectives. He says that often high returns won't adequately compensate for added risk.
In terms of taxable investments, I would strongly recommend government funds. And I say that because the spread between junk bonds or medium-grade bonds to Treasury is very narrow. So an investor is not really being compensated to take a lot of credit risk. On the other hand, tax exempts, in my view, are extremely good value. They really haven't adjusted to the higher tax rates that we've seen and have been suffering from a lot of supply in the markets.
Coming up tonight on your portfolio, the first of a special 5-part series featuring some of Boston's leading mutual fund companies. We'll kick things off with an inside look at the Pioneer family of mutual funds, a Beantown institution with a strong commitment to value investing.
We try to do a lot of try to gather a lot of information on ourselves. I'll give you an example of what I'm talking about. All of our portfolio advisors, or the funds that we have, are also analysts as well. In fact, the rule of thumb at Pioneer is you can't be a portfolio advisor until you're an analyst for a certain number of years.
Our studio guest tonight is Frank Bogan. He is the senior portfolio manager of the Pioneer 2 Fund. If you have any questions about investing in today's market, you can give us a call tonight, 7 Eastern Time, on your portfolio. All right, when we come back, we got Joe Kernan coming up here with a look at this hour's winners and losers. Karen Gibbs taking a look at what's going on in the futures markets action. You know, the cash bond market is closed today, not so the futures markets in Chicago, and Karen will report on that after this.
At a time like this, how could you think about your investments? At a time like this, it makes sense. Your retirement money has to last you the rest of your life. That's why you should look for conservative investments with income and growth potential. Benham now offers a no-load utilities income fund that may help you stay ahead of inflation. So call Benham, because it's always a good time to think about your future.
The Mid-America Commodity Exchange, part of the world's largest futures exchange, has been a thriving marketplace for both speculators and hedgers over the last 125 years. Whether you trade through your broker or become a member and traded membership rates from your home, office, or on the exchange floor, the Mid-Am gives you the opportunity to trade 27 of the most liquid contracts in the world. Lower your margins, traded membership rates, diversify your trading. The Mid-Am. For information, call 1-800-843-2268.
The United States had to import 2 trillion more cubic feet of natural gas than it could produce in 1992 to supply an ever-growing need for this EPA clean-burning fuel. American Resources of Delaware Incorporated, one of the United States' newest NASDAQ-traded full-service natural gas companies, is helping meet that demand. Call this toll-free number to learn why major New York brokerage firms and analysts are recommending the purchase of emerging junior energy companies in the natural gas industry. Call now to find out more about this virtually undiscovered by Wall Street 10-year-old natural gas producer with 300 owned and or operated wells, 225 miles of gas transmission lines, and contracts to deliver all they can produce to such end users as GTE and Procter & Gamble. For more information on American Resources of Delaware Incorporated, call 1-800-822-4434.
How many stock and option trades do you make yearly?
More than 40? Then as an active trader, Spartan Brokerage from Fidelity Investments is your window of opportunity. With deeply discounted commissions, up to 86% below full-cost brokers. With additional 10% savings when you trade by touch-tone phone or personal computer. With an additional 10% monthly commission credit when your commissions reach a minimum level. And with some of the lowest margin rates in the business. Most important of all, you get excellent service from professional Spartan brokers who know the special needs of active traders. So if you make large or frequent trades, get deep discounts plus the financial strength of Fidelity. For your free fact kit on Spartan Brokerage, call 1-800-342-1118. Spartan Brokerage from Fidelity Investments. Call 1-800-342-1118.
Welcome back, everybody. Almost, what is that, Joe? Almost 9 minutes for the hour? It's hard when it's not the hands. I can know the hands. That's a
9 and a quarter minutes.
9 and a quarter right now.
Keeps changing.
It keeps sticking. It'll take
Exactly.
time away from you here. Winners and losers. We've got a lot on the plate today. Huh?
A few things, anyway, for a Columbus Day holiday. First company, along with Alza Corp, is the world's leader in new drug delivery systems. This company happens to be based in Ireland. It's known as Elan Corp, and the shares are currently soaring 3 1/8 after Kidder Peabody repeated a strong buy rating. The stock rose Friday as well after the company announced a breakthrough in the delivery of a widely used drug to prevent blood clotting known as heparin. An analyst at Kidder says Elan has been the fastest growing drug company over the last 5 years. He set a price target of $45 a share for that stock. It's now trading at 37 1/4. Of course, it was trading at 34 when he made the recommendation. Elsewhere, U.S. healthcare is plunging 2 5/8 in heavy trading. Goldman Sachs making comments here, removing the shares from its recommended list. Analyst Roberta Walters now rates the stock a market performer. The analyst says it's likely that she will pare her 1993 earnings estimate by 10 to 15 cents a share. The analyst cited a recent rate decrease ordered by the New York state insurance regulators. Thiokol, meanwhile, gaining 1 3/4. Used to be called Morton Thiokol before it split off from Morton. Morgan Stanley raised its rating on the shares to buy from hold. This stock hit a new 52-week high earlier today. Thiokol makes solid rocket propellant systems for the space shuttle and missiles. Moving on, Bush Industries rising 1 1/2 to 24 1/4. That's a new high here as well, new all-time high, and up from a 12-month low of just 7. This company saying third quarter net more than doubled on a 30% jump in sales. Bush makes ready-to-assemble furniture. Finally, we talked about this one earlier. Atlantic Coast Airlines, a recent new issue, shedding 2 7/8. The company today saying that its load factor plunged to 44% in September from better than 50% in the same period a year ago. That's also known as yield, and that measures the percentage of seats filled by paying customers. Atlantic Coast cited high frequent flyer redemptions in the period and said those should continue for the next few months as well. This company also said on Friday that third quarter net would come in below expectations. Atlantic Coast operates as United Express under a pact with United Airlines. And, Neil, I said it was a recent new issue. It came public in late July at 10 and soared to 17 before now it's back down below 10 again. So we'll see what happens with that one.
Okay, Joe, thank you very much. Joe Kernan. Karen Gibbs is here right now. Take a look at the futures markets activity. You know, the cash markets closed for the holiday, certainly the Columbus holiday. We're here, by the way, all of us, obviously. But the cash treasury, but not so the treasury futures.
Right. We did see an abbreviated trading session there, but for all intents and purposes, there was not much going on.
Well, it's hard to do much against
It really is when you have no Fed, no treasury, no cash market, no
just
banks,
us.
just
Really?
us.
Just us. Yeah.
There's no justice. It's
There is
just
no justice.
us. You know?
We've got winners and losers. Thank you. You're done now.
You can tell we have a lot of time here.
Yeah, go ahead. Yeah.
Well, we're going to get right to it because we're still seeing some stock index futures trading. In fact, those are the only futures markets that are open. They close at their regular time, so we still have an hour and a half to go, and we're holding on to very slim gains and incredibly quiet trade. And as Neil's been telling you, it's very light trading going on in the stock market, very light volume of just under 150 million shares. Let's go to the board and see where everything's trading mid-afternoon and where everything else closed up. You still have the December S&P closing, trading up 0.55 at 461.90. Again, they'll close at their normal 4:15 Eastern Time. Major market up 1.55. New York Composite up 0.30. The mid-cap, the S&P 400 up 0.65. The value line up 140. The Nikkei index was closed last night also for National Sports and Health Day, but the index off 0.30 now in very narrow ranges. And the bond market in the Treasury sector closed mixed here. T-bonds off 1 at 120.20. We did hit 120.26 overnight, and of course 120.30 is the life of contract high. That is expected to be retested this week with the slew of economic data coming out the end of the week. T-bills and Eurodollars aggressively unchanged on the day. Looking at the intermediate sector of the curve, 2-year note, 5-year note, and 10-year note, flat to off about 4, with the 5-year, which has been the best performer, seeing a little muni defeasance support evaporating, particularly since there was no municipal market today. Looking at the the foreign exchange market, it was thin trading there with the dollar chopping around. Dollar index managed to close up 9 at 92 and 33, while the IMM currencies ended a very short, slow session, unchanged to mixed. You're looking at Swiss franc off 19, German mark unchanged. The Swiss franc was down 6. The British pound, which has been under some stress recently, declined 34 ticks, while the Canadian dollar was up 5 and the Australian dollar up 15. In the precious metals market, we saw gold trying to hold on to a little bit of gains. In fact, it closed up 20 cents. Silver slipped 3 cents after some options-related strength all of last week. Platinum up 50 cents. And in the palladium market, it sounded like a fund was short and got squeezed on light volume. We rallied $4.55. Copper, however, closing higher in very subdued trade. Most of it was short covering that penny point 15 gain. Lumber off 30 cents on some profit-taking after being a little firmer earlier in the day. It was uneven holiday-type trading there. No cash market flows back and forth. We saw a mixed picture in the grain market, particularly with the USDA crop report due out tomorrow. Corn up 2 3/4, wheat unchanged, oats up a penny, beans soared 6, with the products a little bit mixed on the day. The live cattle market paired its gains. In fact, we saw live cattle going off 45, feeder cattle off 70. Goldman Sachs Commodity Index up a half. Bellies and hogs paired their losses but ended mixed on the day, off 28 for the December hogs, off 45 for the pork bellies. Natural gas off 2.6 cents. In the crude oil market, we're still seeing some support there, 17 cents higher at $18.91. The products firmer in sympathy. As we go to the New York market, some movement there too. Cocoa rebounding after last week's sharp sell-off, up $28. Sugar at 10.55 cents per pound, off 0.18. Orange juice and cotton saw thin speculative activity. CRB index gained 1.20 at 219.80, and there are your cash indices. All in the plus column, the gold just by the hair of its chinny chin chin. Okay, Neil.
Okay, well, you know, considering we had limited activity today, you
we
filled
made
that
it
up very nicely.
Thank
you very much, Karen Gibbs. All right, just over an hour worth of trading to go, and we've got 7 1/4 points upward here on the Dow. On it's not such bad volume at that, 146.5 million shares. Nothing like we've had lately, but certainly you'd expect maybe a little bit worse. You would?
Yes, I would.
Play along with me here, okay. All right, that does it for this hour of the Money Wheel after Karen gracefully helped me out of this one. All right, Ted David to take you through the final hour of trading. I'll see you on Market Wrap an hour from now.
Weeknights turn to CNBC. TV Guide calls it a bargain hunter's best bet. Steals and Deals with host Janice Lieberman and a team of consumer advocates go undercover to find the best buys and expose the latest ripoffs. Weeknights only on CNBC.
There are 2 new voices coming out of Washington.
Excuse me for having my Republican hair start on fire. They smell blood here and they go for it.
Equal Time with Mary Madeline and Jane Wallace.
You can get away with a lot if they like you.
Only on CNBC.
Las Vegas is well known to its tens of millions of past visitors.
What is not well known is that there now emerges a new Las Vegas with billions of dollars of additional investment in state-of-the-art interactive entertainment facilities. The new Las Vegas will be marketed to the world's population as a family destination resort unmatched anywhere for its size, excitement, and fun. The Las Vegas Investment Report provides fact and opinion about the publicly held companies in southern Nevada. The report will keep you up to date with money-making ideas and information. New experiences await the visitor and the investing public as the awesome new facilities are introduced to the world. Investors should know that for the past 10 years, the gaming sector has outperformed 98% of its stock price competition. Yes, Las Vegas pays off big.
You can bet on it. Call now, 1-800-NEW-VEGA.
CNBC's Market Wrap is comprehensive, in-depth market analysis. Market Wrap is the hows and whys, the ups and downs, the winners and the losers. Market Wrap is far-reaching, late-breaking market news after the closing bell. It's Market Wrap, a recap of the day's global events and the impact it has on the world's markets, Wall Street, and you. Market Wrap, covering the world's business is our business. Weekdays on CNBC. Money all day, talk all night.
And welcome back to the Money Wheel on CNBC. I'm Ted David. Here's what's happening. A new twist in the continuing battle for Paramount Communications. After meeting this morning, Paramount's board of directors said it would begin talks with the QVC network about its $9.5 billion bid, but at the same time, it announced it would proceed with the merger it had already agreed to with Viacom. Viacom chairman Sumner Redstone has vowed to complete the deal with Paramount, but has said he sees no reason to up his $7.5 billion bid. Right now, Paramount shares currently trading up an eighth at 76 7/8. QVC is down 7/8. Viacom Class B is up 1.5. In other corporate news today, Eli Lilly is eliminating 4,000 jobs over the next few years. This marks the latest retrenchment in the once lucrative pharmaceutical business as the industry awaits President Clinton's health care reforms. That news was welcomed by investors. Right now, shares of Eli Lilly up 3 at 53 1/8. Let's take a look at what's happening on Wall Street. This is a day that basically is a holiday for many of the markets. We saw no cash bond traded today. The bond future settled out early today, and it was down just 1 tick. There were no market activities in Tokyo today, a holiday over there. And we did see the DAX set a new record high, and we have the Dow up 7.5 here, 3592.29. Very thin volume today. We'll get to that in a moment. The S&P mid-cap up just 0.5 point. The Wilshire small cap up about 4/5. Transport's up nearly a little more than 9, actually, 1645.44, with Delta and UAL both up more than a point. We've got the utilities down 0.46 at 243.34. The NYSE Composite Index up 0.67, 256.48. And there you see the thin volume, 145.8 million shares with less than an hour to go, 78 new highs, 14 new lows. We have breadth at the moment positive by about 50 issues with 678 stocks unchanged. The broader measures look like this. S&P 500 up a point. The Amex Market Value Index up nearly 3. The NASDAQ Composite today, despite a precipitous drop in Intel, down 4 1/2 at the moment. The index is up 2 2/3 points, 766.92. Roy Blumberg is our market analyst, and he's live at our Wall Street Bureau for market comment on this sleepy kind of day. Roy?
Well, Ted, indeed, it is a fairly slow day today. The Dow Jones Industrial Average did move sharply higher in the first few minutes of trading, up about 11 points. From there, it drifted back to even in the next few minutes before moving to +5. It hasn't been very far from that level in the last couple of hours, and in fact, after the bond future closed, it got even quieter. Volume is on the slow side. Breadth is positive by about 50 issues right now. We have strength in secondaries, electronic instruments, drugs, broadcasting, tobaccos, and the shoe stocks, where we have weakness today in semiconductors, engineering and construction, telephones, aluminums, and the hospital management stocks. But Ted, with a lot of traders out today and no particular new news, it is indeed a market drifting. Back to you.
Roy, we'll check in again next hour. Market analyst Roy Blumberg, live on our Wall Street Bureau. As promised, up next, we'll kick off our week-long look at international technical analysis with John Murphy, and today, a special guest from Great Britain, right after this break.
It just opens up a whole world of opportunities.
It is a state-of-the-art way to make money today.
Introducing Investors Business Daily. It's the new voice in journalism, edited for America's business and investment community.
It's helped me make a lot of money.
Get 10 issues of Investors Business Daily, plus the audio cassette How to Make Money in Stocks, absolutely free.
It's a no-lose proposition.
It's an invaluable asset. Call now. The cassette and the issues, a $25 value, are yours free.
How can you refuse something that's going to educate you, hopefully make you money, and you're going to give it to somebody?
You'll get business articles, graphs, and tables you won't find in the Wall Street Journal.
The paper provides information that obviously you can't get anywhere else.
It gives you a clearer direction of where the market is heading.
I recommend it to anybody who has an interest in the stock market.
Call now. Get 10 free issues and the tape, a $25 value, free.
It's the only paper that has ever made me money. Serious money.
Without the Investors Daily, people are going to have a very difficult time being successful.
Natural resources are fueling America's future, and Petro Union Incorporated, through its 4 wholly owned subsidiaries, is strategically positioned for opportunities in all areas of natural resources. In oil and gas exploration and production, the company plans a heavy emphasis on natural gas and development, using proprietary horizontal drilling technology. Petro Union also has a 66 million ton recoverable coal reserve and 73.5 million tons of 98% pure calcium carbonate, another valuable resource. Recently acquired, Green Coal Company added 1992 revenues of $58.7 million. In August 1993, Petro Union received confirmation for an irrevocable collateral commitment from CFC Finance Limited of London, England. Said commitment is to secure debt financing for up to $50 million. For free investment information on Petro Union Incorporated, call toll-free now.
Tonight on McLaughlin. The Clinton prescription. What will the president's health care plan mean to you? Better medical care or rationed health care? And how will we pay for it?
That's tonight on McLaughlin, only on CNBC.
Tonight, Tom Snyder.
And on the color cast to come, we take a look at domestic abuse in America. We go inside the dysfunctional family and find out why husbands and wives and spouses sometimes get physically violent.
Tom Snyder. Tonight. At 8 Eastern, Steals and Deals uncovers the best buys and exposes the rip-offs.
Hi there, and welcome to this edition of Tech Talk with John Murphy. I'm Ted David. Today, John and I kick off our week-long review of international technical analysis. We're pleased to bring you some of the highlights of the International Federation of Technical Analysts' 6th annual conference. It's being held this week in New York City. Joining us today from Britain is Robin Griffiths of James Capel & Company, and we welcome Robin to CNBC and thank him for joining us. Good to have you here.
Yeah, thank you very much.
John, interesting market to look at, the UK?
It's been one of the biggest leaders of the year, Ted, and of course a lot of strength in the European markets, and of course Britain has participated in that. By the way, I just want to mention that Robin is also the past chairman and currently a fellow of the British Society of Technical Analysts, and I think one of the founders of that society. Robin, it hasn't escaped our notice that the British market has done very, very well this year. In fact, it's been one of the leading markets in Europe. Why don't you start with just a quick overview of what the British market looks to you right now?
Well, it looks very positive. We have a classic pattern of rising highs and lows on the chart above both short and long-term moving averages, which are going up. That's my definition of a bull market. It started to look this good in August of last year when we dropped out of the ERM. Ever since then, it took off, and the trend has been very strong indeed.
No sign of a top yet.
No way. We've had a consolidation period, but that's healthy and normal within a bull market, and it's still going. It's on its way again to new highs.
You brought some charts with you. Let's start with the first one. We have a long-term look at FTSE, which is the British, the FT 100. Let's start with that. This is a chart going back about 5 years. We've got a couple of moving averages on it as well, a 10-week and a 40-week moving average. Why don't you interpret that for us?
Okay, well, the important low to really look at is the low from August of last year. Actually, FTSE was then 2260. It had quite a steep decline to that low. That was when we came out of the ERM. Then in the normal sequence, the index cut upwards to the short average, then the long, and then you got the so-called golden cross of the two moving averages. And the rise from that low was 25%. I call this a quantum jump. It's almost the minimum amount of rise that I expect to see when the market really starts to trend. It then got a little bit too high too soon, and I measure that by the deviation above the moving averages, and it entered a consolidation period which went sideways for about 6 months. And now that that is over, it's on its way up again.
What can we learn from looking at perhaps a shorter-term chart of the FTSE?
Okay. When we call up the shorter-term chart, you should see there the consolidation phase. Notice there was a little bit of downside in it, but really the lows never really retraced very much of the previous rise. The lowest low in there was just a whisker under 2,800. So now, 2,800 was the last point at which it touched the rising long-term trend line and has broken out upwards. If you like, the stop-loss level on the market was down there. The previous all-time high had been 29.57. That's that point just under where it says 25, with a 25-day average. So that the next time it broke above that was a new high breakout, and you needed to see the next major lows above the old high to confirm that the breakout was good, and that's exactly what you've got on a little bit of a recent pullback that we've had in the market. So the stop loss now comes up as high as there, just a whisker under 3,000, and it's on its way again. The last surge was 300 points, almost in a straight line. The next surge should be roughly equal to that, giving us 3.3 as our new target. I would then expect it to have another consolidation phase, but not really to come back down again.
Robin, does it bother you that a lot of these markets, our market and the European markets, have had a fairly good run here, and many of them, I think your market is about, what, 200 to 300 points above the 40-week moving average. Does that bother you a little bit that, although they look very good still on the charts, and there's no real sign at the top, does it bother you that maybe they're beginning to look maybe a little bit overextended, maybe in need of some of a correction, maybe closer to that long-term moving average?
Well, they are overbought. But I measure how much overbought they normally get in bull markets, and they can get more overbought before I really look for a setback. Secondly, the weight of money is really very large indeed. When a market's underwritten by a big weight of money, you expect it to go into the big stocks. I have a series of indicators that I have where I look at the market in slices. The FTSE index is the top 100 stocks. And then I look at the next 100 stocks, which I call Tootsie, and so on down in small slices all the way down in the top 500. And my indicators show that most of the best action is right up in the top 100 stocks. That is a breadth. Uptrends are outnumbering downtrends by 6 to 1. It's really very powerful and shows that it can't fall. No investor has an incentive to sell.
That's actually the opposite of what we're seeing here. In Britain, what you're saying is the top 100 biggest stocks are leading. Am I hearing you right?
Absolutely.
In this country, it's just the opposite. The smaller and the secondary stocks seem to be leading on the upside.
Yes, and they've taken some of the big leaders out and shot them one at a time. That hasn't happened in the UK market with a few exceptions. If you look at the big drug stocks, the brewers, the food retailers, and the food manufacturers, they have very negative chart patterns. So
you've been worried. I know John has been worried from time to time when we've seen so-called divergences.
Yeah.
But we've seen the FTSE, the equivalent of the FTSE, our Dow 30 moving up, but none of the other markets confirming that.
Yeah.
Are you concerned? Is that sort of what's happening?
I have in mind that some markets should lead others, and the fact that Wall Street has been leading the London market is normal in my judgment. And then I would expect our market to lead other continental European markets in the cycle of events.
One of the stocks that I know you like is one of the cyclicals that, given the economic recovery that's going on in the UK, we would expect to see, and that's British Steel. We'll take a look at the chart. Give us your feel for it, if you would.
Okay. Well, you can see that it was in a massive downtrend and still in the middle of 92. And then after that low, we had a pattern of rising highs and lows cutting up above the long-term trend line, which itself turned around and started to rise. And, okay, so it's overbought, it's deviated above that trend line, but there's no reason to expect that uptrend to stop. Furthermore, when I take into account both the rate of rise of the short, the medium, and the relative strength trends, this stock comes out at the top of my ranking order of all the FTSE stocks. So I have to like it.
How about one you don't like?
One I don't like would be, I've just mentioned the weak sectors would include the drug stocks. If I look at all of them, the SmithKline Beecham's, Wellcome, they're all very negative. Glaxo is the only one that's recently had a rally. And in the rally, it has now broken the still falling long-term trend line. But it caused that breakout by hiking the dividend dramatically more than analysts had been expecting. And that news is now in that price. It's over. So I would expect that chart to, at best, go sideways. And it's in a sector where everything else is definitely going down. So my analysis still says leave the drug stocks way alone.
Robin, that opens a very interesting point. You know, we often talk about global linkages between the various stock markets, Britain and the U.S., for example, the bond markets also. We talk a lot about that. But I think what a lot of people maybe don't realize is that there are global linkages within industry groups. And you just mentioned the steel stock, for example. Steel stocks have done very well in this country over the last year or so. Drug stocks have been very much out of favor. So we even see and you can trade these industry groups even across national boundaries. So this idea of linkages exists on many different levels.
Yeah. No, I think that's absolutely right, especially in some industries where the products are sold globally. And furthermore, the cost of developing a new product is so big that it only makes sense if you're going to sell it globally. You would expect a correlation between the two sectors.
On behalf of our expert here in intermarket technical analysis, let me ask you, how much do you look at the gilt market, for example, in the UK, and perhaps come up with prognostications of what you think equities are going to do based upon where interest rates are headed?
I look at it quite closely. The reason is it's the trade-off between how attractive gilts are against equities. What we've got, and this is a global force, but it's particularly strong in the UK, is the trend in interest rates is downwards. And because our interest rates are actually still quite high, they've got a long way further to go. That tends to underwrite the bull market that you get in the gilt market, but it also progressively makes equities more attractive against the gilts, which yield progressively less and less. And this is partly what's producing the weight of money that's driving our bull market.
A lot of people in terms of investment have basically said the United States is tired, and they're looking overseas. Now, when you are overseas,
yes,
when you look west to the U.S., do you see tired also, and do you also look further east to some of the more emerging markets and
yes.
the Pacific Rim?
The answer is yes, indeed. The interest rates started to decline in the U.S. earlier, and they've got down to lower and been there for longer. So they must be nearer the end of the game there. The UK is following the US's footsteps, but it's got further to go in that direction. We, in our own business, observe a flow of funds into our market from America. And I do also look to the emerging markets. Some of the strongest ones on my charts are in the Pacific region, or the Far East region, as we call it, and where the growth in their underlying economic activity is really very powerful indeed.
A pleasure to have you.
Thank you.
Thanks so much for joining us. We've been speaking with Robin Griffiths from James Capel and Company, London, England. Tomorrow, John and I will be back. A technical report from Mexico. John, of course, will join us again for Hour 2 at Market Wrap with another look at the markets from a technical perspective. And we'll be back with more Money Wheel in just a moment.
After a hard day's work, office cleaning should be the least of your worries. That's why over 100,000 businesses depend on the ServiceMaster system to custom clean their offices efficiently and thoroughly. And why ServiceMaster assigns a supervisor to work as part of a team dedicated to meeting your needs. The ServiceMaster system has satisfied customers for more than 40 years, and our written guarantee brings any problem to a quick solution. ServiceMaster. Check your local white pages or call 1-800-WE-SERVE.
When John Nagy joined CompuServe, he was new at computing and an old hand on the mountain. He joined to get more out of his computer and more out of life. On CompuServe, as on the mountain, there was always something to discover, like the solution to a software problem that wasn't in the manual, or being one of the first to know about that special vacation spot and how to save time and money getting there. The mountain was a source of satisfaction he would never outgrow. In a way, a lot like CompuServe. For more information, call 1-800-554-4046. Start with the basics, news, travel, and encyclopedia, and more for just $8.95 a month. Then go beyond for free software and help with hardware and software problems. You'll get more out of your computer and more out of life. CompuServe, the information service you won't outgrow.
For all of you with the courage to go it alone, to put your future on the line and your name on the door, there's the corporate card from American Express. Use it for all your business expenses. We'll organize them by category.
and even provide records of charges. It's a great way for any company to get a handle on costs. Call 1-800-SUCCESS, the corporate card to your success.
Do you know which 200 stocks in here have raised dividends every year for the past 10 years? Like to know? Then call 1-800-452-9522 for Quick & Riley's exclusive dividend study. They're all in here, and it's free when you call. And get the full story on our new breed of broker, who saves you up to 76% over full-cost brokers. Still like to know? Here's one. For the rest, call Quick & Riley now for our free dividend study at 1-800-452-9522.
To help manage your money more wisely today, get the Wall Street Journal Guide to Understanding Personal Finance. The guide is filled with information you need to know before you buy a home, plan your retirement, or start saving for your child's college years. Subscribe now to the Wall Street Journal. Take advantage of this introductory offer. Get 10 weeks of the journal for just $36 and your free copy of the Guide to Personal Finance. Call 800-445-4600. That's 800-445-4600.
Welcome back. Shares of Intel are down sharply at this hour, off 4 3/4 at 65.5. The company reported third quarter earnings more than doubled to $1.33 a share from the previous year. That's in line with street expectations, but the company says margins fell to 63% in the period from 64% in the second quarter. After repeated questions from analysts about future margins, the company would only say they will remain in the 60s. Meanwhile, Lehman Brothers cut Intel's 1993 earnings estimate to $5.25 a share from $5.40 in 1993 and to $5.70 from $6.50 per share in 1994. And a merger in the banking industry, Fleet Financial Group announcing this morning that it's agreed to acquire Sterling Bancshares Corporation for about $125 million in stock. Works out to $39.50 a share. Under the terms, Fleet would swap about 1.15 shares for each Sterling share. Right now, Waltham, Massachusetts-based Sterling Bank currently trading at 36. That's up 5.5 on the session, and Fleet is down a quarter at 33 7/8. In other news, Bell Atlantic announced that it will buy up to a 42% stake in Grupo Usacell for a little more than $1 billion. Usacell is the second largest telecommunications company in Mexico. That deal is expected to have a slightly negative effect on Bell Atlantic's earnings, at least for the first few years. And shares of Bell Atlantic right now down 1 3/4 at 59 5/8. More consolidation in the healthcare industry as companies scramble in anticipation of President Clinton's healthcare reforms. Herc Celanese Corporation agreeing to buy a major stake in Copley Pharmaceutical. It's a generic and over-the-counter drug maker. The cost, $546 million. Herc is paying a premium price for its 51% stake, as the Canton, Massachusetts-based Copley had sales of just $51 million last year. Shares of Copley at the moment down 3.46 3/4. Market correspondent Hillary Johnson is off today. She'll be back on Wednesday. In her place is our Wall Street reporter David Faber to take a closer look at the generic drug stocks industry. Hi.
Hi, Ted. Thanks. Generic drug stocks took off today on a wave of takeover speculation, but on Wall Street, analysts aren't really sharing in the euphoria. It's not worth waiting for the next deal, so get out now and take your gains. That's the sobering strategy most analysts are telling their clients to follow. Niels Weig at Ladenburg Thalmann says investors should sell into today's strength. There may be a few more acquisitions down the road, but with the generic stocks up 60% this year, as Weig says, there's no reason to get greedy. He's not alone. Hemant Shah runs a research boutique focused on healthcare stocks. He thinks generic stock prices have peaked, and he isn't a big fan of the group's business prospects. Generic drug makers are in a commodity business with low margins and no barriers to entry. That doesn't make for a pretty picture. Evan Sturza edits a medical investment newsletter. He says the optimism in the group is way ahead of the reality. It's always possible another drug maker will get snapped up, but Sturza says there really aren't many pure plays in the industry left. Sam Isley of the boutique Maida and Isley says there also aren't that many drug companies still looking for generic partners, and certainly not at the price Hext is paying for Copley Pharmaceutical. Generic drug companies make their money by selling discounted copies of name brand drugs. The generic makers come in after the drugs go off patent. Competition in this arena is growing fierce now that so many drug companies already own their own generic makers. Zweig uses naproxen, a popular anti-inflammatory drug, as an example. Syntex makes the drug and will sell $680 million worth of it this year. But when its patent expires in December of this year, the company's Hamilton Drug subsidiary will be in the market selling a generic version of naproxen at a steep discount to its current price. That makes life tougher for companies such as Mylan Laboratories, which also wants to start its own version of naproxen. Mylan is one of a handful of generic stocks that are up big today in the wake of the takeover announcement. Ted?
Thanks, David. That was CNBC's Wall Street reporter David Faber, who's also managing editor for the Private Financial Network. Time to take a look at the most active stocks today. Given the holiday, we'll take a look at them, and we start off with those most active on the big board. Philip Morris here topping our list. Morgan Stanley analyst Howard Penny repeating a buy on the stock, citing increased market share for the company's flagship Marlboro, and the stock is up 3/4. Merck is better by 5/8 today. And we also have RJR Nabisco up an 1/8. Advanced Micro Devices is up an 1/8, and Micron Technology is down 5/8 on today's session. Here are the other actives on the big board. Compaq Computer up 1 3/8 at 60 and 5/8 today. We've got Texas Instruments down 3/4. Motorola, it is at the moment up 3/8. Toys R Us up an 1/8, and General Motors is unchanged on the session. The company may lose $2 billion this year, mainly because of uncompetitive labor costs, according at least to an article in the Wall Street Journal. Here's a look at the Amex stocks most active at this hour. Chambers Development Class A down an 1/8. IVAX is up 1 7/8. Hillhaven Corporation right now is down a 16th. National Patient Development